Hello, traders out there in Traderland. My name is Dez. I'm senior analyst, owner, and mentor here at Grok Trade. It's Tuesday, January 18th, 2011. All eyes are on Apple earnings coming out. I was not going to wait until the typical 5 o'clock Eastern Standard Time when they do release it. So I'm doing the video before the announcement, but wow, what a day that we had today. A big gap down, rally north on today's action. And with that has come a lot of volatility. We're still down 2.25%, down almost $8 here on Apple. But the rally today, the reason we rally, and this is what I want to show everybody. If you draw a couple of trend lines here, swing high to swing high, swing highs coming across here, come across, and then these swing lows, swing low, swing low, swing low, come up. We have two trend lines coming up, and they converge there. So we dropped, went down below, came back up, and then rallied, finding major support at two trend lines. So the secret here, what the lesson can be learned here in technical analysis, anytime you have two trend lines there, and you get a gap down near that trend line, you have to watch it like a hawk, because if it goes below that trend line and you see it bounce back over them, opposed to them acting as resistance and follow through to the downside, that is an awesome opportunity to play a gap fill, especially if you're in the markets, if in front of the markets intraday or at the beginning of the day. Gap fills are a wonderful play here. And matter of fact, we teach gap fills and how to play these in our mentorship. We do have a mentorship coming up next weekend. But anyway, let's talk about technical analysis. We're going to go here now to the S&P daily, and the S&P daily, we continue northbound. Look at this. We made a higher high, higher low on this bearish divergence that we were seeing here on the MACD. We're seeing a breakthrough. We're trying to head north, but what we really need to do here is get above this high right up there. We really need to get above that. We continue with the positive ticks on the histogram. We continue above the zero line on the histogram. All is bullish. So there again, as you remembered from my soapbox talk on the weekend edition video, is you need to remain bullish if the markets are in fact bullish. Do not be a bear in a bull market. That's an amateur mistake. What we want to do is quit thinking like amateurs, start thinking like professionals and expert traders, and stay with the trend of the markets. But look how we're starting to toy with the 1300. 1300 could be a resistance point, so you want to watch that like a hawk. As far as the markets are concerned, you have the Dow up 0.4%. S&P didn't do as well, 0.14%. NASDAQ 0.4%, which is pretty good. But the Russell's actually at break even for the day. So break even for the day, if you were to go to Russell's, you could see that we have this formation. We dropped, came back up. I mean, we have what's called a tweezer top and also a hanging man formation here for those that are technically inclined. So I don't like what I'm seeing here on the Russells, to be quite frank. So if Apple comes out with a horrible report, IBM comes out with a horrible report, everything starts to tank, I could definitely see this market relaxing and wanting to pull back some. But let me say this again. When you have the markets going up in this tight little channel, as long as we remain in this channel, there's nothing to say you should be going bearish. Even though we are overbought, we are extended, you need to stay with the trend. The trend is, in fact, your friend. Never forget that. Banks were slightly up, so the banks were not up as much as the market, so that does not bode well. Furthermore, the VIX is up 2.6%. The fear indicator is up in this, and so is the gold. Gold was up 0.5% today. U.S. dollar down ever so slightly. It was down quite a bit more early in the session, and that really gave a pop to the markets, gave a little move there. Although the Dow was up, we have transportation down, taking away from this movement that we received on the Dow. Right here at Grok Trade, as you can see with this video, we are heavy in the technicals. and we take the technicals very seriously. And I highly recommend anybody that wants to be part of a free webinar to know more about more formalized trading education, so you're not just out there doing it as a hobby. Free webinar tonight. To sign up, go to meetthementors.com and fill out the form, and be glad to talk with you this evening, let you know about more formalized trading education, really get you to the next level so you're out there trading with your eyes open. Hope you can join us. We have a mentorship coming up this weekend, 22nd, 23rd, and 24th. Hope you can join us. Take care and safe trading to each and every one of you.